All right, rates are plummeting as the market is buying into the shift. What the heck does that even mean? We're going to go over that. Let's get the show on the road. All right, so everybody's been talking a little bit about, hey, the market's going up. Hey, the market's going down. Interest rates are going up or interest rates are going down. Totally normal. The funny thing is, if you're watching this show every single week, you're learning that, hey, we're actually seeing what we call seasonal normals. And that is super important to understand because it helps to keep things in perspective. Now, as we talk about our market, we're going to focus, as always, on the residential side, condos, multifamily, commercial investments, things like that. Those are different reports. If you're interested in those, just let me know. We'll forward those off to you. But let's talk a little bit about what are they talking about when they talk about rates are plummeting and the market buys into the big shift. Well, as you can see from our newsletter, this is one of the two that we actually put out. You can see when we talk about the 10-year treasury that the actually mortgage rates, even though they're not tied to the 10-year treasury at all right? Freakishly enough, though, they follow the 10-year treasury. And as we see the 10-year treasury coming down, as we're seeing inflation numbers coming down and the feds start talking about, hey, September might be a good time to talk about maybe reducing the Fed rate. Again, feds have nothing to do with mortgage rates. They can affect it, but they actually only control like your home equity line of credits or what's called a HELOC, your car loans, your credit card payments, what banks trade or lend to each other on a daily basis. That's the Fed rate. Mortgages, believe it or not, look at your mortgage-backed securities, they're publicly traded. That's why morning rates and afternoon rates can be completely different. All right, so as we head into this and we take a look at some of our top headlines, look, June pending home sales benefit from inventory growth. What they're talking about here is the fact that our inventory in a lot of areas, including ours, has actually gone up quite a bit. And we're going to talk about that, albeit we're only at 48% of where we were pre-pandemic. In 2019, we're only 48% of that. And then before that, it just gets worse as far as our numbers go down. We still don't have enough inventory, but we still have enough inventory to help us kind of maintain more of a balanced market. All right, moving on. So if we come here and we pop this back up, mortgage rates have absolutely come down. And that is super awesome. Why? Because here's the thing. With better numbers, with the bad employment numbers that are coming out, the market said, hey, we're starting to see a shift here, and we're starting to see some benefit from the lower inflation numbers, even though monthly obligations for a lot of people as far as grocery, gas, things like that have not changed. In fact, they've actually gone up just a tiny little bit. With that, mortgage costs have come down, but home prices are still heading in an upward trend. And it is the concern of affordability. Yes, it is still a major issue. However, taking a quarter rate drop just as last week is a big deal. That is a massive benefit. We're actually seeing some people that are saying, hey, are we going to hit 5% this year? I don't think so. I think we're going to be close. But remember, normal historic mortgage rates are between 6 3/4 and 7 1/4. Somewhere in there, they always bounce. Those are good historical rates, and people are acclimating to that, albeit some people are holding off for better numbers. All right. So when we take a look at the Feds, sorry, I had a little bit of hair there. We talk about Freddie Mac. Freddie Mac's running day average says, hey, George, we're at 6.73%. Challenge is with Freddie, this is a running day, 7-day average. They have not taken into effect that we saw a pretty significant rate cut Thursday, Friday, and that will show up probably next week. But right now, par pricing is about 6.5%, which is really, really good. So if we open that back up again and we pop over and we take a look at what is going on in the market as far as inventory, as far as homes for sale, what has gone pended, what has gone sold, how many properties, reduced their price. If we look at that left chart, you can see where I've highlighted July 21, July of 2022, July of 2023, and here we are, July of 2024, and that's the average sales price. So if we take a look at our actual listing inventory, our 7-day running average was 1,193 came on market. We had 1,352 homes that actually went pending. So roughly about 200 more homes went pending than came on market as we start to drop down that inventory. We started seeing over 1,000 homes that have closed, a few more price reductions than what we would normally like to see. That's just sellers who, well, they just kind of missed the mark. Smart thing is that they're starting that price reduction to get and to trigger or ping the market, right? Because remember, super, super important message for you guys, right? All right. As far as a seller, as far as a buyer goes, buyers make your market, okay? They tell you what they're willing to pay. That's super important because the seller might say, well, I want this number. I understand what you want, and it's good to want, but that's not what always happens, because if the buyer doesn't see that same value, it's not going to matter because they're going to say no. And our buyer market are super, super smart. They can take a look at online. They'll look at your price, which is your first impression. And if the price is within the realm of consideration, then they look at your pictures. Second impression. All right. Then when they come out to your home, they're looking to see, is it a good fit? All right. So understand, price is the most important thing. And unfortunately, there are agents out there that sell price and the buyer or the sellers out there are going, yes, this guy, he can do it for me. That's called buying a listing. And the reality is that, well, as you can see, we have over 800 price reductions just in the last 7 days. That is a situation where either a seller or a listing agent gave the overpromise and the market said no. Okay. So understand, the market is super clear on what the expectation is. All right. Now, remember, here we go. Let's pop this bad boy up. If you're looking for super accurate information consistently without any selling, well, this is where you come to. Why? Because let's talk a little bit about our market and what it is doing as far as what we're doing for average sales price and average homes for sale. And as you can see, over the kind of the trend here, the bottom red line you can see is in an upward trend, and the top line, which is the average for sale, is on a downward trend. Now, why is that important? Super important because it allows us to take a look at the seasonality of what's going on. Now, George, you said that now twice, seasonality. What the heck has seasonality got to do with this? Understand, real estate, without a doubt, has its seasons and its cycle as far as what sells more in one time in the market and what sells for less. Like the vacation trifecta, listen, mid-May until basically after the July 4th weekend, the real estate market almost comes to a screeching halt. Many times we used to call it the real estate ghost town. Vacations, you had 2 federal holidays in there. Plus you got kids getting out of school, or, people going out and wanting to do things and their mindset is elsewhere. Then from post July 4th until about mid to late August, well, really mid-August, we have that surge. And that's where, hey, we need to make our move for the summer. And hey, we got kids getting in school. I have to reposition myself to be in that school district, right? And that's a big push during that time. And then all of a sudden, we put on the brakes again, and we will so we have Labor Day weekend at the end of August to September-ish, right? And then all of a sudden we got kids back in school and we have last minute vacations. It basically kind of slows down again, seasonally normal, until we get to, you guess it, the end of September, October, boom, it'll kick off again. And it does this every single year. The only year that it didn't do that was in 2020 because you were already home. So everybody else is out doing their thing. So remember, we're seeing seasonally normal. So sometimes you're going to see reports and whatnot. Well, they talk about pending home sales are down and they're up and they're down. And you're like, oh my gosh, what's going on? Well, that's what's going on. So let's get back to the nitty gritty of things here. All right, when we take a look at our average sales price year over year, from last week, we're down $1,000, but we're almost 10% over year. When we take a look at just July, right, 2023 and 2024. Oops, I pulled up August. That's all right. So when we take a look at this, we're at 912,000. That's basically up 3.2%. And the value to that one is to understand that we're still seeing sold prices on an upward trend. Active prices are still heading down on a little bit of a downward trend as people are adjusting. We've started to see more inventory come on market, which is excellent. And we're starting to see kind of that equilibrium. It does not mean that we're in a market crash. We don't have enough inventory for a market crash. Are people being wiser about their market? Sure. Do people tend to slow down this time of year based on the fact that sales slowed down between the middle of May and July 4th? Of course. They look at it and they see that trend. They kind of carry that trend, and then it carries back up again. That's why looking at the solds is not the best way to look at it, because you're always looking in the rearview mirror. You need to look at pended. You need to look at active. You need to watch that trend to best know market. Well, basically, where's the market trending? The solds, that's where the market has been. And yeah, there's merit to it, but still, if you're looking for dynamics, active and pended, that's what you want to look at. And there you go. All right. Okay, let's pop this bad boy up again. So we pop over and we take a look at some of our numbers here when we talk about actual numbers available. Hey, listen. We've got 3,000 more homes available this year than we did last year. Our solds are up 1.2% year over year, and pendeds are up almost 2% year over year. And then, of course, when we talk about the month of July, got this one right? 23 versus 24. Hey, look, solds are up 11%, and pended, those are up almost 13.5%. As far as actual volume. And that is spot on perfect. Sure, July outperformed June. We just talked about that, seasonally normal. And then August is going to do really good. And then whoop, it's going to slow down again. It's seasonally normal. Plan for it, because as a buyer, that is a big motivation for you. Because then as you start taking a look at new construction, month end, that is where a big number comes into play if that's a market that you're interested in playing in. All right. So as we take a look at this, we pop over to new construction, right? You can see the blue line, our inventory starting to flatten out. And as you look at it from last year, you can see that same trend. As a flattening out, it'll have a little bobble upwards, but pretty much going to stay in an average trend. The actual solds, those, hey, listen, those have been heading in an upward trend. Sure, they bobble depending on time of month. We had a really good end of July. We had some really good market push. You take a look at some of the marketing that they're doing, which is more aggressive. Why? Because with more inventory of resale homes coming on, buyers are looking at the resale because they're a better value in many circumstances versus paying that 10% premium for new construction. And smaller lots, sure, they're new, but there's a lot that goes into it. So they are really pushing. I mean, look at that, 4.875 for your first year, and then it settles out after that a little bit higher, but still, it becomes a fixed rate after that. That's hard to walk away from. They can do it because the big builders have all of their financing in-house, and they're able to offer incentives while maintaining flat pricing. All right, let's get back to this. So when we come back in and we take a look at what we're doing for the average list price or the average for sale price and the average sold price, you can see in our top chart there, it just went almost vertical. Again, month end, massive incentives, right? So when we come over here and we take a look at it, hey, our average for sale price year over year from last week, our price is the same. We're still 4.6% up from last year, but the actual average sales price is the same as it was last week. Now, when we take a look at the month of July, look at that. The month of July year over year is up $88,000 or 10% difference. That was a big number. And I really wanted people to see that because there are folks out there saying, George, I think the market's just tanking. And I'm like, what? Where do you live? Anyway, as you can see, we actually have seen year over year, average sales price is $88,000 higher. We have seen roughly about a 7% increase in home values year over year. Our inventory, yes, the number of 30% looks big, but the actual physical number is super small, right? We're only 3,000 homes over what we were at last year, and that's 3/4 of Washington state. That is not a big number. Again, we're less than 49%. We're like 48.2% of where we were market-wise pre-pandemic. Keep that in mind. So half the inventory. But again, it's not like we have massive scarcity, okay? Because you can see the pendant and the sold are right on target with each other, real close, which means that the number of homes coming on, number of homes going out, that's a very good balance. We're doing really well market-wise. And as rates start to come down, we're going to see that shift, and we're going to see less incentives from from builders as that starts to shift. So let's get back to the big screen here. Let's move over to really at the end of the day. Let's talk a little bit about volume and velocity. When we take a look at it, the number of homes for sale that are new construction versus active historically on average is about 11%. We're at 16% right now, a little bit higher. And again, we're seeing a lot of the buyers going towards resale style homes because there's more options and for a variety of different reasons. When we take a look at July year over year for the same month, look, we're only up 41 homes. Again, very small numbers, 8 homes less pendant. That's not a big deal. That's pretty much chump change, right? So our numbers are small because we just don't have a ton of inventory. But again, it's still really balanced to where we're at today based on the mindset of buyers and affordability. Affordability being the biggest nut all the way across, right? All right, just saying. All right, if we're going to talk about nuts, all right. Sometimes people think I am. All right, so when we talk about, let's go back to the big one here. When we talk about, when we take a look at bank-owned homes, all right. Bank-owned homes, what a shame. We have the wall of shame, and we talk about the month of July. Let me blow that back up again. That is just absolutely staggering. So you can actually see I have the actual line, the number of homes, which is less than what it was the prior month. And of course, we have the wall of shame. And when we take a look at the actual numbers here, if we see that, hey, we've got 17, 18, 19 homes of the 76 that are not foreclosures, they're just mismarketed as foreclosures. That's really unfortunate. And that's what we look at and why we call that the wall of shame. Some people ask, George, do you tell these people, these agents, that they have mismarketed their home? And the answer is yes, we do. We do a one-time reach out, say, hey, listen, we're doing our update, and hey, your seller-owned property is not bank-owned. You may want to change that. Some change, some do not. Unfortunately, the wall of shame. So our numbers, our REOs, our bank-owned homes, super, super small numbers, right? And when we take a look at it, all of our REOs are like super, super, super low. Super low, all right? Now, why is that important? That's important because people who think that REOs right now are a great investment, they're not. Because we have so few homes available, because we have so few foreclosures, banks are going in doing paint, carpet, and vinyl and getting market value for them. Sure, they are stuck with, what an appraiser might say because they are required to get appraisals. They have to match an investor. They can't leave dollars on the table. Many times they overprice themselves. So REOs will stay on the market longer historically by twice than what a resale home would be. And that's not uncommon, okay, because they have to report to a higher authority. Anyway, just saying. All right. So all things considered, if you are interested in wanting to know more information, make sure you smash that subscribe button. Let us know what your questions are. If you have any questions, post them. We normally answer you within about 30 minutes, except for on Sundays. And all things considered, if you have a desire to add or be live on the show, hey, we are always inviting different vendors to come and be on the show. A lot of people get a little scared, but I invite all of the vendors to come in and share some of your knowledge. And in the meantime, it's a beautiful day out there. It's a little toasty. Make sure you stay hydrated. I'll see you on the next video, and have an absolutely beautiful day. Take care.